Well, good evening, everyone. We have some breaking news. Pretend there's a breaking news banner flashing across the screen. The legendary investor Bill Ackman has recently, as of this week, purchased $1 billion of none other than Netflix stock. That is over 3.1 million shares of the company. And in this video, I want to discuss it, and I want to read through his letter where he outlines why he purchased this stock. He goes through in great detail and explains his thesis on it. Now, before we jump into that letter, I want to give a little bit of a precursor and say to witness the destruction of Netflix and the stock over the past couple of months has been pretty incredible. It's been a bit of a learning experience. This is the biggest position I've held by far that's had this negative of an outcome. It's gone down 40% from its all-time highs. It's down to prices of the 350 range now, and it was trading almost at 700 just a couple months ago. And what I've seen happen over the past week has been pretty remarkable. Netflix gained 8.3 million subscribers in one quarter, barely missing their estimate of 8.5 million. They guided next quarter for 2.5 million instead of the 5 million the street wanted. And that guidance, that lowered guidance for one quarter only, caused the entire destruction of the stock, down an additional 20% after it was already down 20% from all-time highs. Not only that, not only did the stock price fall, but after the stock price fall, sentiment changed. People instantly changed their entire view on Netflix, their entire thesis. Everything seemingly changed overnight. The company went from this massive streaming company with a huge global TAM that can gain 700 million plus subscribers to now this very limited company that has high content spend and has lots of competitors and is highly saturated. I noticed that very quickly overnight, the entire sentiment of Netflix changed. It went from incredibly positive to incredibly negative. So this experience with Netflix has really made me appreciate how quickly sentiment can go from positive to negative on a stock. It can change overnight. And this type of news from Bill Ackman, I think, is very interesting because he's taking a completely contrarian approach to this whole endeavor. He's not viewing the company as negative. In fact, he's quite positive. With that said, let's go ahead and jump into this letter. This is from Bill Ackman himself from Pershing Square Capital, his investment firm. He says, "Dear Pershing Square investor, beginning on Friday and over the last several days, we acquired more than 3.1 million shares of Netflix, making us a top 20 shareholder in the company." So they're a big shareholder now. The opportunity to acquire Netflix at an attractive valuation emerged when investors reacted negatively to the recent quarter subscriber growth and management's short-term guidance. Netflix's substantial stock price decline was further exacerbated by the recent market volatility. I think he's correct in that. The two things that really caused the sell-off in Netflix were the slowing growth, the guidance, in combination with the market volatility in general. I think these type of stocks are getting hammered right now to begin with. Now, continuing on, he says, "We have greatly admired Netflix both as consumers and as investors, but have never previously owned a stake in the company. Netflix is a primary beneficiary of growth in streaming and the decline in linear TV driven by its superior customer experience, a vast and diverse amount of superb, constantly refreshed content, global improvements in bandwidth, and the proliferation of continuous improvement and convenience of devices on which one can watch. Netflix's business has highly favorable characteristics, which include a subscription-based, highly reoccurring revenues and an enormous future growth potential." There he addresses the TAM. He does not view Netflix's TAM as being saturated, as many people are claiming right now. He says, "A truly best-in-class management team and a unique high-performance culture." If you've studied Netflix, that's 100% correct. "Consider Netflix's remarkable pivot from DVD rental by mail to video streaming to become one of the greatest producers of beloved content ever." They have pivoted a lot in their history, so I agree with that as well. "Economies of scale and superb quality in the industry-leading content, which should continue to drive future growth and widen the company's powerful competitive moat." A lot of people don't view Netflix as having a moat. This is something that I've argued for a while. I think they do have a moat. "Pricing power derived from enormous value it delivers to consumers compared with other alternatives. Substantial margin expansion with the opportunity for continued improvement due to economies of scale and the company's rapidly growing global subscriber base. An improving free cash flow profile, which should allow for continued investment in growth as well as return cash to shareholders." One thing that people missed in this last shareholder report is that Netflix reiterated they're going to be free cash flow positive this year and then on in the future, forever. He says that we began analyzing Netflix in connection with our investment in Universal Music Group. So we were prepared when the stock price declined sharply last Friday. Now with both UMG and Netflix, we are all in on streaming as we love the business models, the industry context, and the management teams leading these remarkable organizations. Now, after this point, he goes into some technicalities of how they're funding the purchase in their firm. I'll skip to the more relevant part. He says, fortunately, all of our portfolio companies are extremely high-quality businesses that can withstand inflation as they have the ability to price their highly desirable products, services, and assets to preserve their profitability in an inflationary environment. So Netflix does, in my opinion, have pricing power. They just literally announced they're raising prices in the US. Even with their slowing subscriber growth, they feel confident in that. They say, we do not believe that the recent move in rates has had any meaningful impact on our company's intrinsic values. As such, we believe that our portfolio companies trade at an even more material discount to their intrinsic values, particularly in light of recent market-driven price declines. While we do not know what the stock market will do tomorrow, next month, or even over the next year or two, we believe that our companies will continue to compound their intrinsic values at high rates for the long term. So there you have it. That's the letter from Ackman. So after reading that, let's try to break this down a little bit. What do I think of Bill Ackman buying this large position in Netflix? A couple things comes to mind. First of all, I know that a lot of people don't like Bill Ackman. The whole CNBC Hell is Coming incident has been memed to death. And that was something that he did, a couple years ago, which I think deserves criticism. Now, having said that, investors should be objective and rational. So put personal feelings aside and try to assess whether or not he makes good, long decisions, good bets when he goes long on companies. Investors sell for many reasons, but they only go long on a company. They only buy for one reason, and that means that they think they'll make money. That's the only reason you buy a company. Bill Ackman has an incredibly good record going long on companies. In fact, if we look at some of the companies that he's gone long on recently, we have Lowe's, which has done amazing. We have Chipotle, which has done more than amazing. We have Hilton, which has done really good. We have Restaurant Brands International. This one has been okay. It's been pretty flat, not amazing. Howard Hughes Corp, that one's done really well. And Domino's has done amazing. The majority of his highly concentrated portfolio has done incredibly good, far better than the average of the market. Another thing that I'd highlight is none of these companies were rash decisions. Bill Ackman does not do investments on a whim. He doesn't buy companies without doing a substantial amount of research and really understanding that business. He has teams of people dedicated to this. In fact, Monish Berbrai has mentioned that if you want to look at a world of stocks to invest in, you can waste a lot of time starting with all 5,000 and trying to filter through all 5,000. His recommendation is to use people like Bill Ackman as a kind of a first area to filter out stocks. Here's a clip just a couple days ago of Monish Berbrai talking about this very thing.
For something to make it into the portfolio of Chuck Akre or Bill Ackman or any of those people, it's gone through a bunch of filters. Bill runs a concentrated portfolio. He might have one or two new positions. He's got a team. They look at hundreds of things, right? So if something has made it through, it's worth checking out and trying to reverse engineer why it made it. And so I think it's a big advantage to use as your universe to dig into what other people have already figured out. So instead of starting with, here's 50,000 stocks globally, let me go figure this out, that's a really tough job. But if you take that skill set, that data set down to here's 50 stocks, which are the top holdings of 10 or 15 investors that I really admire, or here's 20 stocks that are in that group, it's really relatively easy to go through the list and say, okay, which ones can I understand? That'll throw out a bunch of them. And which ones are great businesses? And that'll again throw out a bunch of not so great businesses. And then the ones that are great that you can understand, you can look at the valuations and go from there. Pretty simple.
So Manish didn't say, go out and buy any company that Bill Ackman buys. That's not his message. That's not what he's saying. But he is saying that if a company ends up in a portfolio of someone like Bill Ackman that literally holds like 6 or 7 positions, he does investing full time. He has an entire team of people working on doing analysis on these companies, their moats, their cost structure, their growth potential, their leadership, so on and so forth. There's a good chance that a lot of the work, the research is already done, and those companies possess qualities that other ones don't. that's something that you can kind of use as a starting point. Now, Monish mentions to do your own research on top of that and see if you also agree with their assessment on the company. And as it turns out, of course, Netflix is a company that I really like. I see a lot of qualities in it. So it's not exactly surprising or shocking to me to see this type of company with this quality end up in Bill Ackman's portfolio, especially after it sold down 40%, which in my opinion, again, it's just my opinion, I can't see the future, but I think it's a bit of an overreaction. I think a lot of it has to do with this sentiment change, this narrative change. I don't think all of it's based on fundamentals. I think that it's a pretty dramatic change in sentiment for lowered guidance of one quarter. And I keep coming back to that conclusion. So it's not shocking that a company like Netflix would end up in Bill Ackman's portfolio. So where does that leave me now? First of all, I think that it does work as a little bit of a confidence boost to have someone like Bill Ackman jump in on this stock because everything so far has been negative. The sentiment has been widely negative. Everybody says it's the destruction of Netflix, the company's done, the growth is saturated, too many competitors, so on and so forth. So having someone like him jump in, I think is just a breath of fresh air. It shines a little bit of light into Netflix that maybe not all is lost. Someone else that does a lot of research on these companies does see some positive future. That's the first thing. I'll also mention that I have been buying more of this company. I've been dollar cost averaging into it. I recently purchased $2,000 of it after the drop, and I'll probably continue to do additional buys into it and get my position size back up to the 20% that it was at below the drop. So even if the stock price goes up a little bit, 4 or 5%, to me, that doesn't make a huge difference in the long run. I think Netflix will either be, in my opinion, a huge winner or the bears will be correct and the company will be a failed investment. I don't see a ton of middle ground with this investment. So that's my thoughts on it. I just wanted to give a little bit of an emergency update, talk about the news and discuss it here, and I'll have more updates in the future.